Good afternoon, everyone. I'm Peter Ciganik with GTIS, and I'm going to talk about industrial sector in the U.S., which has been the best performing asset class over the last more than a decade. If you look at the performance of this asset class, it's outperformed everything else, including multifamily and single-family rental. This is a chart of real estate values since 2015. And the story can really be told by looking at this chart, which is completions and net absorption of industrial space over that span of more than 1.5 decades. If you look at the first part of it, well, 2010 was the time when Amazon was a small company with $34 billion of revenue, and the behemoth was Walmart with $400 billion. More than a decade later, Amazon surpassed Walmart for the first time a year ago at $610 billion, and that's comparing the best. Walmart is still around and growing. Many of its peers have gone to the wayside. But look at what's happened to industrial in that decade. I circled it in green. This is the excess of net absorption over supply. A decade or more of more demand than supply, of course, results in vacancy that's now at around 4%. Never seen that before. Industrial was referred to as a 10-10 kind of business by joke. It's 10% vacancy and $10 rents forever. Well, that's changed. 4% vacancy and rents that have grown by double-digit numbers for quite a while. And then wham, COVID happened, 2021, and you can see the excess absorption here completely took out all empty space of the market, resulting in what we couldn't believe, a 17% increase in rents over that time. And this is industrial space, pretty commoditized. So let's talk about the post-COVID supply chain and what has happened to this, because it's kind of an interesting story. This is my very cartoonish depiction of a supply chain coming from a ship to a warehouse, to a truck, and then to your door, eventually through e-commerce. It's really driven by three things: the enormous variety of products that we've come to expect from e-commerce. When you go online, you don't want just 3 types of the same thing. You want 100. You want to see the selection. And you want it now. It's the speed, it's the next day delivery. And you want quite a convenience of having it delivered either to your house or to your vacation home or curbside. So all of these 3 factors really drive expansion for space. You need more space when you have more SKUs, as they call it, more variety of products. I'm going to talk about some long-term structural forces that are changing the supply chain. As for every young business, eventually some pressures start to appear, and they are energy and transportation costs, which are very high and continue to be so. The labor force decline.